how many agents are set up properly versus not when you first meet them?
The majority of them, when I first meet them, are not set up properly. Contact me, we can do a tax projection, see where you're at.
What's the best way to manage the incoming funds as they're closing properties and earning commission throughout the year?
I like calling, creating a new account, tax account. Run this like a business. I love the real estate game.
Love it.
So we can guide there, right, with the rentals, passive income. That's a pretty good retirement plan.
So my guest today is one of the best CPAs I've ever met in my life. He's my personal CPA. With us today, we've got Mr. Joe Angel. Joe, thanks for being here today.
Absolutely, thank you.
Absolutely.
Yeah.
So we're going to talk about real estate agent tax strategies. And as you know, real estate agents aren't great putting money aside for a rainy day. We get a big fat commission check, and I think a lot of real estate agents think that they get to keep all that money. So what I wanted to do with you today was kind of walk through, some things that you see commonly, the big mistakes you see agents making, maybe some strategies, some approaches. And I think the big thing is, how does an agent set up for success when it comes to their overall tax strategy and managing the money? So first off, before we jump really deep into it, tell us, how long you've been in business, a little bit about your practice and some of your specialties.
Sure. Yeah. So Joe Angel, CPA, with my master's. My license is for all 50 states. I've been doing this almost 20 years. Our firm was started over 40 years ago by my father. Like I said, my license is all 50 states, so I have clients throughout the country. And real estate and realtors and mortgage professionals are one of my specialties. I've been working with them a long time. I know their business cold. So yeah,
it's phenomenal. It's phenomenal. And then that's why I wanted you to bring you on today, because you're, like I said, you're a great friend of mine. You've been my personal CPA. You've helped me tremendously. And I think for people that watch this video either now or sometime in the future, most of it's real estate agents, and they need a lot of help. This industry needs a lot of help. There's not a lot of direction when it comes to how to structure, because a real estate agent comes into the industry most of the time with no business background, never being self-employed. So let's start off with, in your opinion, how do you think a real estate agent should set themselves up as far as an LLC or an S Corp?
Sure.
How should they structure themselves as a self-employed person?
No, that's a great point. Most realtors were either employees or don't have the background of running a business. And running a real estate team or business, that's a business. You have to run it like a business. So the question, how should they be structured? My rule of thumb, it's very simple. You have either an LLC, and that can be a single member LLC, Schedule C on your personal return, or you have an S corporation. So LLCs or S corporations.
Okay.
Right? If you don't set up either, you're going to default to Schedule C on your personal. And it's simple. It's a gross receipt number. Once a realtor's gross receipt is over $150K for the year, $150 to $200K, the S corporation makes sense.
Okay.
S corporation.
Got it.
The reason we say wait till 150, one of the compliance rules of an S corporation, the officer, the realtor, has to be on what's called a reasonable compensation or a wage, a W-2 wage. Okay.
Got it.
So we issue at the end of the year usually a W-2, keep them in compliance. So you have some payroll taxes paid in there, and then also some quarterly estimated tax payments.
Yeah.
But you have the S corporation, LLC, Schedule C.
Got it.
LLC, Schedule C. Realtors, you're taxed on your net number. So you have a gross income minus your expenses equals a net number.
Okay.
That's what you pay tax on. In an LLC or Schedule C, that net number, you're paying an additional 15.3% of what's called self-employment tax or SE tax.
Got it.
Pretty substantial. S corporation, no SE tax, but you pay the payroll taxes on your W-2s. At the end of the day, the perfect combination for a realtor who's making over $150,000 gross on their 1099, it's an S corporation with a wage amount.
Got it.
That's a perfect plan.
Makes a ton of sense. And so let me ask you, in your experience, as long as you've been doing this, how many agents are set up properly versus not when you first meet them? I'm just curious.
No, the majority of them, when I first meet them, are not set up properly.
And that's what I found too.
Yeah, even if, let's say you've been doing it 1 month or 15 years, I've picked up a veteran realtor who just was never set up properly. And I said, look at the amount you're paying in self-employment tax per year. Multiply that by the 15 years you were doing business.
That's incredible.
And you can't amend for structure, for entities. You can't go backwards.
Okay.
Keep that in mind. However, now, here we are, middle of December 2020.
Yeah.
You can set up an entity right now as a realtor that will go retro for all of 2020.
Wow.
All of 2020. So here you are, you had a killer year.
Yeah.
You didn't know, you're new to the business, you're over 150. Oh no, what do? We can set up an entity right now.
That's phenomenal.
A little bit too about our firm.
Sure.
So I have 25 employees, a bunch of CPAs, certified QuickBook Pros. I have paralegals where we set up entities, do operating agreements, payroll department, sales tax department. The bulk of my firm, it's tax work.
Sure, makes a ton of sense.
Yep.
And so, again, I think what will make sense at the end, for sure, because you do business in all states, pretty much. For any of you guys watching this interview, either now or in the future, we'll put all Joe's contact information beneath this video so you can reach out to Joe and his team. So, so that's really the first thing I would imagine when you start working with a real estate agent is to get them set up properly, because their tax exposure, I would imagine, before you start working with them is just, not only is it not set up properly, but they're not structured and they're not running it like an actual business. They're just running it like they're a personal, like they're a salesperson, but there's a lot of tax implications to not being set up correctly. Would you agree?
Absolutely. That structure, that setup, like I said, think about it. If you're not in an S corporation, you're going to pay an additional 15.3% of SE tax off that net number.
Yeah,
that's significant.
Crazy. Yeah,
that's significant. So that structure, also what I noticed with realtors, especially new realtors, they're out, they're jamming, they're running. Oh my gosh, my first year I had 9 closings.
Yeah,
I have this money. What do I do? I haven't paid any taxes. What do I hold off per closing? My rule of thumb, safe rule of thumb, 20% per closing.
Got it.
That'll cover the IRS and the state.
Okay.
Roughly 20%. Then, as you're jamming per the IRS, you're supposed to pay quarterly estimated tax payments throughout the year. When you don't, they hit you with what's called an underpayment of estimated tax penalty.
Right.
Listen, Brandon, we pay enough taxes.
Yeah.
If you can control not paying the penalties to the IRS and the state, it's going to more than cover for my fees.
Yeah.
So that's key. Hey, I'm a realtor. My first year, I'm off and running. I haven't paid any taxes. Contact me. We can do a tax projection, see where you're at, send in some money now, maybe split it up, send in some money now, and suffice the balance when you timely file April 15th.
Love it. Now, what are, I think a big discussion, at least at my company and brokerages across the country and realtors are having, is what can I write off? There's a bunch of myths out there. There's a bunch of, can I write this off? Miles, gas, all these entertainment. Can you give us maybe some common mistakes or some myths, rather, that maybe aren't tax deductible that a lot of realtors think is, or maybe the opposite of what maybe
missing?
That's exactly right.
Yeah. So one, I have for just realtors, a deduction checklist, which the realtor's like, oh my gosh, this is what I've been craving. Thank you. Gives you every category of what to track and what to write off.
Love it.
So we would start with that. Okay. But like you said it, entertainment. Entertainment's no longer deductible. People think it is. But what if you bought some tickets and it was part of a promotion or an advertisement for your real estate business? Now all of a sudden, maybe you could justify that as being deductible. Auto, also a big one. They don't know what to track.
Right.
It's very simple.
Okay.
You can either take the standard mileage deduction, which is total amount of business miles times the rate, which is roughly 58 cents. Okay.
Yep.
So 30,000 miles times 58 cents, around a $17,000, $18,000 deduction. Miles or actual payments.
Got it.
So this would be lease payments, maintenance, gas. What I tell all my early realtors, track them both.
Okay.
Track them both, sit down, oh, look at your miles, that's the route that we're going to use. Moving forward, don't worry about the other stuff, track the miles.
Got it.
With the vehicles too, this is key, and me and you actually talked about this. You can buy a vehicle, let's say that you buy it, new or used, doesn't have to be brand new. You don't have to cash it out. You can finance it, get a payment on it, okay? If it's over 6,000 pounds, you basically can take the entire purchase price and write it off in year one.
Wow.
Bonus depreciation on heavy duty, high weight vehicles.
Okay, so that's huge. Now, another big question, especially right now as we're dealing with this pandemic, a lot of agents are not going to the office anymore and saying, I'm going to work at home full time. Now, can you give us a high level of understanding of, home offices and how that works from a tax perspective?
Sure. So my rule of thumb in the 20 years I've been doing this, I don't like the home office form.
Okay.
I think it's a bit of a red flag. That being said, we come up with what we call a business percentage of these home office items.
Okay.
Now, direct expenses, furniture, computers, iPads, printers, TV, new shelving, remodeled the home office. Those are direct expenses that can be 100% deductible if presented the right way. Okay? Home internet. People don't even think about this. Listen, your whole Comcast, Xfinity bill, that can all be written off. I don't know about you, but me, when I'm at home, put the kids to bed, all of a sudden I'm back on the laptop, I'm back on my phone, I'm working.
That's exactly right.
That's just how I roll.
That's right.
So why not take advantage of that?
Yeah, I love it. I love it. It makes a ton of sense. And so, so we talked about how to structure, how real estate agents should structure their business. We talked about some things that you're seeing. When they get that commission check, should they break it up into different bank accounts? What's the best way to manage the incoming funds as they're closing properties and earning commission throughout the year?
Sure. Early on, before you have a business bank account set up or an entity set up, like I said, keep 20%. I like creating a new account, tax account, savings account.
Sure.
Dump that 20% over to that tax account. At the end of the day, I'll come through with a bunch of deductions. Worst case scenario, you built a little savings over there if you don't have to use it all for taxes.
Got it.
Definitely put some aside.
Okay.
I've also seen the realtor, year one, it was incredible. I had a bunch of closings. I didn't save any money.
Right.
What do we do?
That's what I was going to ask you next.
Worst case, too, keep in mind, you can always file and we can set up a payment plan.
Okay, so let's talk about that because I can't tell you how many real estate agents are on some type of advanced commission structure because they haven't managed their finances properly.
Yep.
There's this ebbs and flows of income and expenses. And quite frankly, most real estate agents aren't great at managing their money. I mean, that's the reality, right? Yep. That's why I highly recommend people reach out to you and work with you. Now, and so if they get into trouble, if they find themselves in a situation where they, earned a lot of money, have a lot of income, didn't put money aside, what are the payment options? What does that look like? What are some options?
So when we do those two payment plans, we also do offer and compromises, or OICs. So say you owe a bunch of back taxes, you're a realtor, you haven't filed, or you're new to real estate, you haven't filed, you owed a bunch of taxes. Right now, the IRS is really working out these offer and compromises where they're settling for less money. They're doing it right now, especially during the pandemic. Keep that in mind. But let's say you're a realtor, you got off and running, you didn't save any money, and you owe a bunch of taxes. You don't have it. Worst case, we file the tax return. You don't want to not file. People think, oh no, I owe this. I'm not going to file yet until I can figure this out. There's penalties for not filing. There's penalties for late payments. So you file. Get a notice from the IRS within 30 days. I owe X. Call my office. We can reach out to the IRS on your behalf, set up a payment plan, keep it the lowest amount of money per month, work out deals with penalties with them, stuff like that.
Got it. Now, another big question that comes up is so when they get their check from their broker, do you recommend that check, the physical money, go into the business bank account, the personal bank account, and then put money into, how should they be routing the funds?
And this is one of the things that I coach and teach people on. Again, they're not used to running a business.
Right.
A realtor is now running a business. This is their business.
300%.
So ideally, whether it's just a Schedule C or an LLC or an S corporation, Okay?
Yep.
We set that up. We open up a business bank account. Business bank account.
Sure.
The full commission check goes into this business bank account.
Okay.
I then instruct you, okay, out of that money, pay your auto, pay your insurance, pay your cell phone, use a debit card for meals, run all these business expenses out of here. Well, wait, Joe, I need money for my personal bills.
Yeah.
Okay, figure out how much money you need, make that transfer from the business account to your personal account, pay your personal bills there. Do not commingle the funds. Run this like a business.
Yeah.
Separate business bank account. I really like QuickBooks, QB Online. We do a lot of setup work where you go and you get the QB Online subscription.
Yeah.
We go in there, set up the chart of accounts. We can point your bank accounts and credit cards to link to QB Online, going to the right expense accounts. All of a sudden, all your accounting's done for you.
Yeah, and that's that's a great point. Does your firm help an agent stay on track throughout the year from an accounting standpoint? Let's walk through maybe some strategies there really quick on what might their options look like with your firm.
Yeah, so my ideal client, year 2, 3, 4 real estate, they're jamming.
Yeah.
We've established an entity. They're paying their stuff out of there. But guess what? They're so busy prospecting or selling or doing what they're great at.
Yeah.
That's what realtors are great at. The back end has been forgotten. No one's worrying about it.
Yeah.
Right?
Yep.
We can step in either monthly, quarterly, semi-annually. We do bookkeeping. I have a whole bookkeeping department where we go in there. I like either monthly or quarterly. Then I'm adjusting the financials. Hey, Brandon, here's what you did for the first quarter. You killed it. Great, let's adjust your quarterly payment accordingly.
Got it.
Then you don't get behind, then you're tracked, then you're up to date, then you're not overpaying or underpaying, and again, we're avoiding those penalties.
Yeah, it makes a ton of sense. And I know we touched on it earlier, but can you clarify, do you recommend, the agents making, $80,000, $100,000, $200,000 a year, the money goes into the business bank account. Do they put themselves on a W-2 salary? Is that how they should be structuring for the most part? Everyone's situation is a little different.
Everyone's different, and every person, they might have a W-2 from another employer, or the wife's heavy W-2. But typically, S corporations, keep in mind, you have to be on a W-2 salary. It's part of the compliance rules. They will give you penalties if you're not. So we would put you on a W-2 salary. We could pay that throughout the year. Or we could issue the year-end W-2, pay the payroll taxes just to keep you in compliance. Another thing, too, realtors get confused once they're set up this way. Income minus expenses equals a net number. That's what they're paying tax on. If you leave all that money in the bank account or you rip it all out as a distribution, no tax difference. Still taxed on the net number. People are like, well, can I transfer the money? Do I pay tax on this? No. LLCs and S corporations. Gross income, expenses, net number. You leave $100,000 in the bank account, you rip it all out to zero, same tax effect. And people get confused with that. People get confused with that.
Yeah, that's huge. That's huge. So, I think we talked about a lot of different, things. What are some things that maybe we didn't talk about that you think real estate agents really need to think about as we get into potentially new administration, and it looks like it's going that way in 2021. Are there any new things on the horizon that real estate agents should be looking out for, or maybe some advantages?
Sure. So keep this in mind. You have Trump's reform for 2020. It will also be intact for 2021. Now, they'll finalize some of the final regs for 2021 as we go in. Then it would be possibly a new tax code from Biden in 2022. So I get a lot of calls, 2020, 2021, should I do stuff now? It's going to be pretty comparable as far as the tax code goes. One big thing they've talked about is capital gains maybe going up. So I know a lot of realtors that do their flips and there's margins. Keep in mind that if that capital gain rate goes up, you might pay some more tax there. But for the most part, it's structure and the same deductions. One thing I do see realtors miss a lot, like we talked about the business deductions, but like some of these qualified retirement plans, like a solo 401k or a SEP plan, you set that up, you basically take money from this pocket, over to this pocket, it's still your money. You made a transfer into one of these accounts, you get tax deductions and you get savings for doing so. A lot of realtors don't know about that.
Yeah.
A lot of realtors are real estate heavy. I love the real estate game. I have rentals.
Sure.
I own a commercial building. I like that. I think you need to diversify between the two markets personally.
Yeah.
Stock market and the real estate market. So if I'm saying, hey, realtor, you can open up a solo 401k, put a max of $57,000 in here, and it's going to create tax savings just by doing so, maybe a no-brainer.
Yeah, so that's a really good point. And I think what we should do is, I'd love to have you back on the show and talk about retirement strategies for real estate agents specifically, because there's some certain IRAs that you can use strategically too, which is phenomenal.
Buy real estate within these self-directed IRAs.
That's exactly right.
And you can see, and I've seen...
Let's talk about it right now.
Yeah, well, real quick. And again, I'd love to come back out and talk. I love this stuff. And, I love working with you and your realtors.
Absolutely.
But, you'll see someone who's been with me for 20 years, just got into real estate. They want to set up a retirement plan combination of rentals and retirement accounts. I can guide you through that, right? The rentals. Okay, Joe, I'm buying a rental. Do I buy it in my personal name? How does that look?
Yeah.
Right? I like the LLC as a holding company.
Okay.
Each piece of real estate you buy is in a separate LLC. Underneath the holding company.
Yeah.
So real estate, all separated. Why? Let's say someone slips and falls in this piece of real estate. Because it's in a separate LLC, they can't sue you for anything else that you own because it's protected over there.
Got it.
I like the holding company because then it's just one neat business tax filing with all these rentals underneath it.
I love it.
So we can guide there, right, with the rentals, passive income, now all of a sudden with depreciation, amortization, mortgage interest, real estate taxes, you've just made a bunch of rental income. Guess what? You didn't pay any taxes on it. What type of, that's pretty good retirement plan.
Yeah, that's huge.
And the whole time while the renters are in there, they're paying down your mortgage.
Yeah.
Eventually you're going to own these all free and clear. Right?
Love it.
So, yeah.
And that's just the thing. I mean, I think that's a whole nother thing, and I'd love to have you back, go deep on that strategy. I think a lot of questions right now around PPP and relief for real estate agents specifically. Can you talk high level, kind of what that looks like as we end 2020, what it might look like in 2021? What might the options look like for real estate agents from a relief standpoint?
Yeah, most of my realtors that I dealt with, I was able to guide them to get the PPP loan, the original one.
Sure.
Okay. We think that that's going to be forgiven.
Okay.
It's a no-brainer. And now the SBA and banks are accepting forgiveness apps. So it's a good time to apply for forgiveness.
Sure.
Get it forgiven.
Okay.
What we don't know is this PPP money that you received taxable or not.
Okay.
Okay. That's what they're fighting on. I think it's not going to be taxable at the end of the day because I signed for PPP money.
Right.
They never once said, plan on paying taxes on this.
That's right.
Now they're going to say that. It's going to be hard for them to do that.
Yeah.
Okay. They're talking about a second round of PPP money.
Okay.
So you got the first round. You wouldn't even have to reapply. The bank would say, hey, Brandon, do you want a second round? Yes, I do. Boom. The same amount that you got the original time, they would give you again. Same concept.
Interesting.
Because, I mean, let's face it.
Right.
The economy's not coming back as quick as people thought.
Right.
That's what you're seeing right now.
Yeah, it makes a lot of sense. So that'll be another thing to see this second round of funding and kind of what all that looks like. So any last words of advice for real estate agents that you can think of, if someone's watching this and they're just overwhelmed, I guess my piece would be have them reach out to you, but we'll get to that in just a second. But how can they kind of process all the stuff you talked about in today's video?
Remember, you're a business now. You're not an employee. You don't work for a brokerage. You're running your own business. Focus on what you're good at. Get coached. If you're not being coached, I think every realtor, every business professional needs a coach if you want to go to the next level. Get coached. Focus on sales, prospecting. This stuff that's overwhelming you, whether it's something that you need a lawyer for or a CPA, defer to the professionals.
Love it.
So many times I'll see a realtor waste half their month on their books when my team could do it in 2 hours, not even charge you anything, and now you got that half of the month to focus on what you're good at.
Love it.
Right? Know what you're good at.
Yeah, that's great advice. Great advice. And so people watching this, how can they reach out to you? What's the best way for them to potentially work with you, and how can they reach out?
Yeah, well, first of all, anyone who's watching this, Brandon's People, I'll offer a complimentary review.
Love it.
Send over
Thank you for that.
prior taxes. I'll review it for free. Hey, you're set up wrong. Here's what we're going to do. Bang.
Thank you for that. Yeah.
Call me at 248-649-8720. Check out my website, angelcompany.com. Angel with 2 L's. And like I said, complimentary review.
Yeah, Joe, I appreciate it, man. I think you dropped a ton of nuggets, ton of value today. Thank you so much, and I'm sure we'll have you back again.
Awesome, man. Thank you for having me.
Absolutely.
Yeah. Yep.